Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. Wow, this is our 300th episode. I cannot believe I've been doing this as long as I've been doing it. I actually didn't think I'd like doing this, and I'm having a ball. We are right at 5 million downloads for this podcast, and this episode is going to be my favorite probably ever because I've got three of my great friends on the show. I've got Gonzales, Maureen Miles, Kenneth Wolfe. We've got pushing $1 billion in assets on this call today. Okay, guys. So if you're in your car, pull over and listen. You're going to get some incredible insights today. All three of them are in my multifamily boardroom mastermind. We get together 3 times a year. We break bread, and we're all good friends. We've all been joking around before we started recording here. So we're going to have a blast today. Guys, welcome to the show. Maureen, welcome.
How you doing? Thanks for having us, Rod.
Absolutely. Glenn, Kenny, welcome, guys.
Very excited. Very excited.
Thank you. Thank you very much, Roddy. So this is going to be fun.
We're going to have a lot of fun. So, I know, Maureen's into thousands of units. Glenn's got, been involved in over 5,000 that he's owned. He's got 800 under contract. Maureen's got 500 under contract. Kenny's pushing 3,000 with another over 800 under contract. I was going to ask you guys how you feel about where we're at in the market cycle, but each of you has got hundreds of units under contract. So I know that you're not concerned, obviously, but we'll dig into that a little bit because I know a lot of people are. So we'll have fun with that. But, I'm going to ask each of you questions and we'll see how we go time-wise. We're going to have a lot of fun with this today. And so the first question I've got is, you guys know a lot of my listeners are new. They're just getting started. Maybe they own some small multifamily, just maybe they own some single family, maybe they own hundreds of units. I've got all of them on here, but I want to ask you each, when you first starting out or as your career built, did you have any aha moments? Ladies first. Maureen, we'll start with you. Any aha moments?
Well, there's a lot of aha moments. I remember taking you go through the seminar, different things to try to learn what you can learn. And just saying I never heard of that before. That wasn't in any of the courses I took, but that's why it's so good to have the networking possibilities and going to events and things like that to be able to rely on some of those, make those phone calls when you need to on people you can trust and things like that. So that was an aha moment. Also kind of missing out on some opportunities in the beginning. That was probably one of my biggest drivers is, I had a great deal one time on, it was just it was a trailer park, but it was very lucrative and I knew it was, but I didn't know enough at the time to put it together myself. So the next event that I had went to for networking, I made sure I found somebody that knew about trailer parks. So, I guess my aha moment is just realizing that when I go to different networking events, sometimes it's not even necessarily the value of what I was being taught or what I was there to learn. It was more the relationships in there. Yeah. And this whole business is really built on relationships and, working with really good people that you can trust is the biggest aha that I've had is just make sure you always associate yourself with just top-notch people all the time.
Love it. Yeah, love it. No, you're absolutely right, guys. This is a relationship business, and I'm sure you're going to hear that as a common theme. So, Glenn, how about you? Any aha moments? Guys, Glenn started as a maintenance man. Now, over 5,000 doors, another 700 plus under contract, or more than that. I'm sorry. Guys, 800 under contract. Any aha moments for you, my friend?
I've had a couple of them just recently. Okay. One of them is kind of high level and one of them is kind of in the weeds, and I'll kind of keep it brief. But on the larger level, I'm selling a 650 unit apartment complex right now. And I've got a yield maintenance that I've got to pay as I exit the deal, because it's an agency debt, and it's tied to the 10-year treasury, right? So as that rate, increases a little bit, I pay less yield maintenance. So getting out of it, if that rate, fluctuates, it could either help me or hurt me. Well, recently that rate's been coming down, which means I'm going to owe more in yield maintenance when I exit. And on this size of a deal, the way that it's adjusted in the last 30 days has just cost me $1.5 million in yield maintenance.
Wow.
One asset on an exit. So, we're thinking about going back to the buyer and saying, how would you like a gigantic credit if you just assume our loan? and it's a good in-place agency loan. So, we got to get a little creative, because on the exiting, it's just as critical when you buy a deal. But when you go full cycle and you get ready to exit deal, boy, that was an aha moment to me. I'm like, wow, that's going to be painful.
No kidding.
The other
guys, those of you listening, yield maintenance is a version of prepayment penalty for those of you in the single family space. You understand, it's the lending institution requires a certain yield on the loan, and if you don't meet it, you got to pay it to sell. So, what was the second one, bud?
So the second one was kind of in the weeds a little bit on operations. I was talking to I was reading a financial statement, and then I noticed that on my financials, the top line had kind of taken a dip and then went back up, and on my gross potential. And I'm like, well, that's not right. Your gross potential doesn't really change every day or every week or every month. So I called the manager. Like, I went right around the regional and right around the bosses and called the site manager. And I'm like, hey, what's going on with your market rents? And she's like, oh, we adjusted those and we're offering specials. I said, oh, you mean your asking rents is a little bit different? She's like, no, my market rent. I'm like, no, not your market rent. So I said, I realized, so I called the bookkeeper. I'm like, hey, bookkeeper, why did the market rents change? Oh, because the manager told me that the market rents had changed. I'm like, no, those are just this week's specials. So they were going into the software and adjusting rents, calling it market. So my aha moment was this, if your manager and your regional manager and your accountant are not all speaking the same language with the correct definition on how you define certain things, it's really going to mess up your financial statements. And that was an aha moment that just occurred kind of this week. And as I peeled the onion back, I was able to talk to the manager and the regional and the VP, and they all had the same aha moment. Oh, we're not all speaking the same language. Manager, that's not market rent. That's just an asking price.
Yeah. And guys, Glenn, like I said, started out in the management business as a maintenance man, then managed upwards of, 5,000 or 15, what'd you say? Yeah, 15,000 doors.
Yeah.
And so you're probably and now he's gone full circle, sold your management company, and now you're using third-party managers again. And you're probably a third-party manager's worst nightmare, because there's nothing you know about the business. So funny.
Yeah. Aha moments. Gotta love it.
Yeah. Kenny, how about you, buddy?
So I guess the first aha moment that we had was sitting like kind of Maureen. You go to those 2-day events or those those networking events, and so we're sitting there in this 2-day event. And they talk about single family investing the first day, and so my wife and I got excited. We're going to buy 10 single family units, and do that. And then the second day they talk about multifamily. So we said, no way we're doing single family. We're jumping right into multifamily. So to me, that was the biggest kind of aha moment was you can go bigger faster doing multifamily. And that's, that's how we were able to scale up so quickly.
Wow. Awesome. So the next question I'm going to ask you is, what's the most important part of your role now? Now, you guys each have teams and you work with teams, and I know some of the people you work with, and some of we've worked together actually. But I want to ask, what role you're playing now, and then what was it when you started? So, Maureen, we'll start with you again.
Let's see. The role I have now is, we all, and I think the others will agree, we are kind of the visionaries for the company, right? We're building up an asset management company, I guess you can call it, whether or not we have our management in-house, what kind of construction legs we have, what we're overseeing. Right now, I have 40 people now that work full-time for me in the different aspects of the company. But as far as my role, it's just trying to get everything as efficient as possible, delegating to the right people. We've gotten some great talent the past 6 months or so, the past year, that has just made my life so much easier. So I've learned a big lesson on delegating to appropriate people, and really, in the beginning, you're trying to cut costs, you're trying to save money doing stuff, but sometimes you really, the right people are a little bit more expensive, but well worth it. And, I really like the culture that I'm able to build now in the company. I come from a corporate background with one of the big telecom companies, and I mean, there were just days I hated going to work. I remember like driving down the highway saying, okay, if somebody cuts me off, I'm not turning because I didn't want to go to work that bad. Like just a small wreck was better than having to go to work, right? So that's a sign, by the way, that you should.
Yeah, that's called a clue. Yeah.
That's a clue. That's a clue.
Wow.
That's Rod. He can't get past Rod, man. He knows clues when he hears them.
That's so what was your primary focus when you were just getting rolling, your first couple of deals?
Yeah, so we do have that infrastructure now, but again, when we started, I guess like maybe 4.5 years ago now, it's been when I bought my first property that was over 100 units. I mean, I did everything. One of the reasons I was okay with moving forward with that first 100+ deal is I stood at the bottom of that drive and I said, okay, you know what, me and my family, we could manage this sucker if we have to ourselves. And so I felt confident pulling in a couple $1 million from investors because I knew I could control it. So in the beginning, I mean, we're looking at, you know, we still look at every dollar spent. I just have more help to do it. But I mean, you're watching every dollar. Just like Glenn had said, you're looking at those income statements, you know, making sure that your third-party management company, which is where everybody starts, is doing the right thing. You know, you're underwriting every deal. You're involved with every pursuit. You don't have the ability to have that team yet. So. But that really is what gets you good and gets you to understand the business and be able to keep everybody safe, all your investors safe. And then what I did is, as I was having these pain points, the things that I realized that if it was on my plate, it would take a little longer to get done. Or, I mean, I work a lot. I love this business, but there's certain things that I just know I'm not the best at. I said, you can't be good at everything. So I would find someone to kind of fill that role for me.
And this is recent for you, right? I mean, learning, really owning, leveraging things. Because I remember we've had conversations where you just, you know, you're handling it all. So. Well,
yeah, and I still try to make sure that. Recently, somebody told me when you delegate, you don't you can't lend it to them. You have to give it to them. And
that's good.
Something that I've been really trying to do.
That's good. I like that.
Yeah.
All right. Thank you. Glenn, how about you? And you know, maybe very, very similar, maybe not. I don't know.
Sure. You know, first, I think I'll kind of speak to what I did in the past. I'll answer the questions a little differently. You know,
okay.
When we grew the company, you know, we were buying one deal at a time. And my business partner and I, we would do everything together, right? And so we were in acquisition mode, then we were transaction mode, you know, and then we'd get in asset management mode and then renovation mode. But we did that kind of together. But after your third or fourth, or when we got to the fifth deal, then we realized, boy, we can't really continue to do all these things. So after being in the business for 30 years, I decided, well, gosh, let's assimilate some people that are really good at what they do. So I moved from doing everything myself, which, by the way, gave me a great deal of experience. And I think everybody should go through doing it themselves, whether you're good at it or bad at it, or if you've never done tax appeals or closed on a transaction or renovated a unit, you should try that. You know, I mean, it's gonna really make you good at what you do. Yep. Now, granted, like Maureen said, and I'm the same way, I'm not the expert in all areas, right? So today I spend my time assimilating great people together, right? I've got contractors that I know are good at it because I've been through 2 or 3 bad contractors, but I found a group. I've got attorneys that are working on my partnership agreements that are really, really good and very dialed in. Why? Because I worked with some that weren't as good. Mm-hmm. You know, so kind of it's by trial and error. But the other thing is you network, you listen to podcasts like this, and you ask the group, you know, who's really good at what they do, and people will tell you. And then they'll
get referrals. Yeah.
And when you have one-on-one conversations with people, they'll also share with you what didn't go so very well, you know, and that information is what you really need, is what didn't work very well. So I now spend a great deal of my time assimilating people together, right? Relationships with great brokers that have good product, that have decent prices, good lenders, good title company, just, you know, you just orchestrate it all. And then because of that, you can really do great things. Yeah. Right. If you try to do it all by yourself, you'll only get so big. Yeah,
no, I suffer from I suffered for a long time from the same thing, you know, and what you come to realize is well, back to your assembling the best people. The most successful people on the planet are the ones that are great hunters of people. They are great evaluators of people. They discover the best. Those are the most successful people on the planet. But as it relates to leveraging, I struggle with that for years myself, and finally came to the realization there are people who can do it a lot better than I can. And you got to let the ego go and realize that they're now that sometimes not, but very often they can. So, but love it. And like you said, and Maureen said the same thing. You should work in every piece of this business so you fully understand it, so that you can properly manage down the road. Kenny, how about you, my friend?
Yeah, so we got started out the same way. I mean, you kind of have to bootstrap it. And, our first deal was 76 units, third-party management. So, we did everything I did everything from raising money to find the deal to dealing with the management company. There's a lot of ways a lot of ways that we were involved, or I was involved. And then now, though, we've really, I've gone to where I've learned, like everybody else here, that I like to find the deals, and I like to be the contact for new equity as well. So that's what I stick to. Anything that falls outside of that, I try to hire it out. So we've got a good team here now in our office.
And so let's talk about team for a minute. What are the different components that you have in your team, Kenny? And then I'll ask each of you, just so people can get a feel for, when they get to your scale, the different pieces that you might need. And I know, Kenny, that you just bought a management company, so you bring in your property management in-house. I know Maureen's had it for a long time, and Glenn sold his recently. But what other members are on your team as it relates to the acquisition, the reposition, and the asset management?
So that for us is pretty light. We just don't need a lot right now. We can cover a lot. So I've got an asset manager, and I've got a marketing / receptionist here in the office. The management company that's, they're full-fledged. They probably have 200 people, on that side of it. But me, just on the investment side, right now we just have 2. We're looking for a third person here in the office. Nice. So guys, there you have it. Awesome. What about you, Glenn? I mean, I know you just aligned with David but do you have asset management component, or do you handle that yourself?
So, when I was with Napa Ventures in our company, we had a couple of key people that were really, really good at what they did. For example, when we were in acquisition mode, and she's still with us because acquisition now she also does all the dispositions, but her name is Vivi, right? And she got a degree from UT, and she in finance, and she came to us as an intern. And Rod's laughing because
I'm laughing because before we started recording, they were dogging each other about his UT shirt. Yeah, that's really funny. Kenny was giving him a hard time about it. That's funny.
And then I put my boots on the table. So yeah, that's all. It's all good. Okay, so refocus. Sorry about that. But for example, Vivi is so good at our transactions that she crosses every T, dots every I. Nothing gets past our attorneys, title company, the buyers that want updated stuff for their due diligence. And she's so organized, and we deliver stuff to buyers that are buying our assets in such an organized fashion that we get this feedback that it's so impressive how organized we are. But really, it's not the company that's that organized. It's Vivi.
Nice.
Vivi's that good, right? We have 2 asset managers. They each had 10 apartment complexes in their portfolio, and I would require them to visit properties and meet with the property management company on a regular basis. And they communicated with the investors on a regular basis. So they really, so my asset managers, I used to do that myself, but I had at one point 23 properties under ownership at one time, and I just couldn't go visit all of them all the time. Right. I just couldn't, physically. So I had to, like Maureen said, give it to them, and they owned it, start to finish, from operations all the way to communicating with the investors.
Wow. Now that surprises me, actually, because a lot of times, the operators will hang on to those investor relationships. So they'll have one person just for that role. But the fact that you tied those in based on the properties that they were overseeing, I love it. I mean, that's a great strategy. And that takes so much off your plate. I mean, you're obviously still available if something gets escalated. In every one of your cases, there's probably an escalation process where you get involved. Maureen, do you do it any differently?
Yeah. So, we do the same thing. I realized that when I was caught up on closing deals and working, kind of overseeing some of the heavier lifting projects we were doing, that I was losing the pursuit activity. So my first thing was, the first person we brought on playing that key role was an acquisitions guy just to help with that pursuit. Stay in contact with the broker. Because, you know, when you're looking for a deal, you're hot and heavy. You build these relationships like a snowball. It builds up. You start getting the feedback. Then all of a sudden you get busy when you're doing it yourself, and you shift into, okay, getting the deals under contract, closing them, and you kind of lose focus on that. So keeping that ball rolling has been probably the biggest difference, the acquisition. And there's many ways you don't have to just hire a guy. You can find someone that wants to be rewarded with maybe a piece of the deal, or, you know, there's other ways to do it without having to come out of pocket for that salary. So that was huge, along with like an EA or an admin person like Glenn's Vivi, just somebody that can keep track and just kind of help organize all that stuff. My most recent one, and again, this is kind of keeping the property management out of it, like Kenny had said. My most recent is more of a CFO position. So I have the admin, I have my acquisitions, that's Will, my admin is Jen, and then I have Roberto I recently brought in, who is the CFO, and he's really great at all the processes and procedures and just making sure that everything's flowing correctly between the different entities and keeping track of all that. So that's really, those three positions have been really
Okay.
allow me to come up for air once in a while. Yeah.
Yeah, no, that's awesome. That's awesome. And that just gives people an idea of, you know, when they get to your level, what's involved. So let's talk about how you guys feel about where we are in the market cycle. Because I mean, I know you've all got hundreds of properties or hundreds of doors under contract. What might you be doing a little bit differently now, if anything, in your deal analysis? You know, what are you doing to stress test and get ready in case, or not in case, when things pull back, which they inevitably will? Glenn, we'll start with you.
Sure. You know, when you look at the big global picture, I'm a net seller. So I'm selling far more assets than I am currently buying.
Right.
Yes, I've bought some. Yes, I have some under contract. But for the most part, if you've held your property for a little while, it's a good time to sell. So now, there's always needles in haystacks, right? You can always go and you can force and you can create value. And when you find stuff that's mismanaged or has a lot of deferred, or just, you know, people are asleep at the wheels and they're not raising rents, those are great opportunities, even in today's market.
Right.
And I still go after those things. I find them, you know, you get to know that on who is, you know, a great operator, not a great operator. You can see, you know, traditionally where values have been and where they are, so you could see which management companies aren't the most effective out there, and just there's all kinds of little things that you could really kind of hone in on. In terms of the market where we are today, yes, I'm still buying, but I'm very, very cautious about a couple of things. My debt and how I structure that, because if I don't hit that value add as much as I thought, I've got to have a plan B going into it. My lender has to be on board with that. And some lenders traditionally have not been. You know, you stick to the business plan. And there are certain bridge lenders. I'm doing more bridge debt right now than I am doing agency. I think that's a temporary moment right now, and probably asset specific. I would also say that the deals that I'm finding are just on the outside of some of these, you know, they're not tertiary markets, but they're in core markets, but they're in places that they haven't really looked in the past. People haven't bid up prices because they're not on people's radar, but they're so close to the action. And if they're in a high growth area where population is booming and jobs are coming, like up in Dallas, right? That's really going on in Dallas. Not so much in San Antonio, but certainly lots of opportunities in Houston as well. So, you know, you just got to know your market. You got to know what you're looking for. I think the other thing I was going to mention that I'm really stress testing is, with all of the damage that's gone on with fires and hurricanes and stuff across the United States in the last year or two, insurance rates are, for me, going through the roof on new quotes. And that is a tough, you know, that's a fixed line item when you buy a deal. So if you underwrite a deal and you're at, I'm just going to pluck a number from the air, right? $75,000 for an annual premium, or you've been at $230 a door in insurance costs, you know, you're going to be pushing $300 a door. And Maureen's laughing for some reason, because I know it's probably
technical difficulties here.
Yeah.
Maureen, yeah, we won't talk about fire when it comes to Maureen, but
oh no, has nothing to do with what you're saying. No technical issues with. I got the sun coming right through my skylights, like right in my eyes.
Oh, okay.
Just move your brother over 5 more feet and he'll block the light, you know?
So talk about for a second, what sort of a stress test you're doing on deals to make sure that you're in good shape. You know, are you you know, like right now we're doing you know, we're looking at the deal 15% vacant. We're looking at a rent pullback anywhere from, you know, 10% on a rent pullback, and we're looking at what our break even point is. Is that kind of the same thing you're doing now, Glenn? And I'll ask each of you the same question.
Yeah, the break even ratio is very critical right now, right. But you know, you also need to stress test your insurance and your taxes. For example, you know, taxes, we've had more success in the past when we do our tax appeals, but we've had less success in the last 12 months on our tax appeals. So the counties and those, you know, taxing entities are becoming a little more savvy in terms of what they're going to give or not give on your property appeals. But yeah, your break-even ratio, and really when I buy deals now, I actually raise enough money for work. I call it working capital, but it's actually a rainy day fund. Right. So that if you dip, you know, you don't have to go back to the investors and do a cash call. I mean, and you can just disclose to that up front. You know, we may not spend this money, but it's going to go into a reserve in the event that the market softens just a bit. We don't have to go back. So. Yeah,
love it. Love it. Maureen, Kenny was next. Yep. Kenny, what about you?
You know, so, I mean, I follow a lot of, you know, Facebook, a lot of folks and a lot of investors of ours too are worried about about interest rates. And I just had a phone call yesterday. They were talking about how interest rates are climbing. And I was telling them, have you seen the 10-year treasury? It's, you know, falling off a cliff. And, I thought I was good to lock in you know, the Wednesday before Christmas, because it went down, you know, 10 bips, but now it's down another 20. So yeah, you know, I tell folks, you can't time the market. Yes, we're going to have a recession. I don't think it's going to be bad as 08 and 09. Right. But we are stress testing our deals too. And, you know, we do the same thing as Glenn, do a rainy day fund, you know, things like that, do higher economic vacancy, pad our expenses a little bit more. But something else that, you know, I'm sure he probably does too. But I look at what's our debt per door. So, you know, if it goes, and we're doing a lot of bridge loans right now too, we've got a few deals under contract, and all of those are going to be bridge loans. And so we're talking, my phone call yesterday with the lending group was, you know, how flexible are you if we have to extend beyond, you know, our extensions, what does that look like? So we're looking at that, the loan per door, because that tells me how easy is it going to be to refinance if the poo hits the fan.
Yeah, well, so both of you guys have bridge debt. Just let me ask Maureen, are you doing any bridge right now?
We're doing 1 with bridge and 3 traditional.
Three traditional. Do you guys have any discomfort with, you know, most bridge debt is all your bridge debt floating?
We can cap it.
Yeah,
you can cap it.
I actually pay to cap mine.
Okay. And then what terms are you guys doing?
We're getting 2 to 3 years on that. With both of them had 2-year extensions.
Okay, and so you know, I guess what would be concerning is if the rates really do pop and cap rates pop, then, you know, it's being able to refinance out that bridge debt, you know, and timing that. So I'm assuming you stress test that as well. You stress test your refinance exit or sale exit, whatever it is, your disposition. Yes.
Right.
I'm asking. Yes, I'm assuming. Of course, you do that. Okay.
Right.
All right. Of course.
No, but across the board, you know, I'm experienced that our bridge lenders are charging a little more in interest than they have in the past.
Okay.
So just kind of be aware of that too. I had a little bit of sticker shock when I'm getting some of these quotes. While you're asking other questions, I'm going to actually look up my last bridge loan, and I'm going to look and see what I'm actually paying final. So.
Sure. So, you know, I was going to ask you guys how to, you know, strategies for finding deals in this market. I already know the answer, but I think what I want to do, and it's because you guys have been at it a long time. You brokers love you because they know you close and all that. But what advice would you give to someone that doesn't have that track record yet, maybe doesn't have, these incredible broker relationships, what would you tell them to do in today's market to try to find deals? Maureen, let's start with you.
Yeah, I mean, if you want to if I could just go back to that last question, just some of the things that keep you safe a little, or that we're doing to kind of just keep us safe in this market is still find the deals with the rent potential as we buy it. We're not buying things because the broker is telling us down the street they did an upgrade and got $100 per door. I think that story's a little old at this point, but we're still, one of the deals we're closing on now has about 150 built in today, not even having to touch a unit per unit. It's just finding those, like Glenn had said, needle in a haystack deals, and just going after them aggressively when we get them. We try to get first sight of these properties and kind of have the brokers bring it to us early, and then we're aggressive with terms, so we can wrap things up quick. Sometimes hard money, I wouldn't advise that in the beginning, but if we're sure about the project, the last couple deals I've won, I've put up, it wasn't that much, just a little bit of hard money on there just to let them know we're serious. And for me, it's worth that little bit. Even if I had to lose 10 or 20,000, it would be worth it to be able to secure that loan or that deal. So just be really careful with your numbers in this market going in, and making sure the spread is realistic as of the day you buy it. We always say we don't create the market, we work within the market. So as the market's getting a little softer, we want to make sure that cushion is there. And then, I'm sorry, Red, what was your new question? No,
actually, let me ask Glenn what he found, and we'll come back to you, Maureen, for that,
okay.
And I'll re-ask the question.
Yeah, so on this one, it's in a tertiary market. I got 75% of the initial cost and 75% of the appraised as-is value. They also lent 75% of my renovation.
Oh, nice.
The interest rate on that is a 3.75 over LIBOR. So, but I also paid for a cap on that. It has built in one 12-month extension, two 12-month extensions. So it was a 36-month with two extensions. That's kind of the interest and the terms on a 156 unit out in the tertiary market. So
okay, nice, yeah. nice. So the question was, Maureen, for people that don't have the benefit of you three's, incredible broker relationships that you've built over the years. Again, the brokers, all your brokers know you're going to close. If you do a deal and you say you're going to close, you're going to close. And in fact, Glenn, I remember in the mastermind you talking about eating, I think it was 150 grand on a deal just to keep the broker relationship, if I recall, or maybe
That's
it was
correct.
100 grand.
Yep.
Yeah.
Yep.
So you guys know how important the broker relationships are, but what would you tell someone who hasn't got, hundreds of units, maybe they've got some, they just want to get started. What would you do if you were in their shoes today to find deals? I'll start with you, Maureen.
So one of the things we've done recently, because, Atlanta is where we based our most of our investments were based out of there. And we're looking to get into some other markets just for some kind of chasing yield, you can say. We're looking in some markets, like Glenn had said, they're maybe under the radar a little bit. So, so we actually I did about a 3-week road trip with my acquisitions guy, William. And it was, my daughter too is in this thing. It's kind of cool. So anyway, it's the 3 of us, but we're being newly introduced into these markets. So I didn't know that the brokers at the time. Will went ahead, he set up appointments ahead of time. We had a schedule where he was visiting, but a broker told me a long time ago, and I was just trying to get into it, is, seeing a face, going out and meeting them is like number one, knowing that you're a serious person. They said 80% of the people that they deal with are, the tire kickers, as they're called, are, phone calls, and they never will really show up. So just by showing up, you're increasing your chances of getting them to know you. And then also the type of deal you go after. So even, we have a good reputation. I can, of course, give referrals to different brokers and owners we've closed with. But I know even in this market, like we've been trying hard to get into the Nashville market, we're having a hard time getting our normal 200 to 300 unit property. So in these new markets, you know what? I'm looking at 125 units, 100 units, because you got to get in. You almost have to, I guess, pay the price a little bit, but just to get something in the market is key. And then you could grow from there. So my advice would be to show up, take the brokers out to lunch, get to know them. Go to different types of networking events so that you do have, when you're ready to put in an LOI, you're not scared, because you do have potential sponsors that are in your court already that can help and assist moving forward. But then also go after that, maybe, you know, if you're targeting 100 plus, maybe you're doing a 75 to 125. Most of the institutional people and the people that are really ingrained in the market and have the reputations, they're not after that size unit. They're going bigger. So, you know, maybe sometimes you pay for something that's maybe it's not quite the area you want to go. It's a little dirtier. There's a little bit more renovation than, you know, you maybe ideally want to do, but you just got to get your teeth into something in that market.
Love it. Love it. And I don't know who said the quote, sometimes half the success is just showing up. Love it. That's awesome advice. Kenny, what about you? What would you tell somebody, you know, that was in this situation I just described?
So if you're new to multifamily, I would say, and I promise Rod didn't pay me to say this, but I mean, I would get a mentor. That's what we did. I mean, I went out and got a mentor because you're dealing with an extra zero behind these real estate transactions. You're dealing with other people's money. Your first deal cannot be bad. I mean, it's not.
Or it'll be your last deal.
Yeah, it's your first and will be your last. So to me, coaching was a big deal. Because I didn't have a real estate background when I got into it. I was coming from oil and gas. It's still numbers, but it was real estate. So that helped pave a way because the mentor, you know, already knew the management companies to choose from, the lenders. I mean, it really shortened my learning curve. So that was a big deal. And also too, yeah, just like Maureen, we found the same thing where we go to a new market. Like when we went to Columbus, Ohio for the first time, I had to buy a 120 unit deal and I didn't want to. It was too small, but it was a way to get us in. And then once we, you know, bought the deal, then they understood that, you know, this guy is crazy being in Texas and buying in Ohio, you know, and he's serious. He is actually going to buy it. And that led us to a 216 unit there. But yeah, when you go to a new market, you kind of have to buy whatever you can buy that is a good deal and whatever size it is.
No, that's great advice. Great advice. And guys, I don't care if you come to my live event or buy my stuff, but get help for sure. Great advice, Kenny. Glenn, what about you, buddy? Anything to add?
Yeah, I would say that stepping stones are always great, right? Because when I was buying, my very first deal was a 44-unit deal apartment complex in a small town called Puyallup, Washington, and I did okay on that deal. And but it was years later. Then I bought a 56-unit and a 64-unit, and then a 157-unit. And then a 327 unit, and then a 650 unit, right?
Wow.
So all of these deals were all stepping stones. And then I had enough credibility after the stepping stones to say, I'm going to go buy this one portfolio from a friend of mine named Ed, who was retiring. He had 8 apartment complexes, 1,500 units, and he agreed to sell them to me. So, but at that point, I had already closed on some of the smaller transactions and built a reputation and had worked out the bugs on the systems and the transactions. Didn't really say I was a perfect expert at it, but I had already learned from my own mistakes.
Sure.
But I'd rather learn all my mistakes on a 56-unit deal than a 650-unit deal, right? So stepping stones.
Less zeros. Yeah, no, I love it. Love it. Great advice. You guys, a similar theme that actually has not come up on the show before. So that's awesome. Now, you know, by the way, guys, what Maureen and Kenny said about networking as well. You know, I have people that come to my live events consistently, one after another, because they meet other people. They find potential sponsors. Hell, I've got probably almost a dozen potential sponsors in my coaching program. But, you know, you just got to get out there and make the connections. And you know, and that's how, you know, that's what's so beautiful about this business is, you know, you align with someone and then you can approach brokers and sellers and say, use the we word and say, we own this, you know, whoever you've got on your team as a sponsor, and you utilize their portfolio to lend credibility to your situation. But let me ask this question, Glenn, and I'll follow up with you and then we'll go to the others. You know, what would you suggest people do to build these relationships? Just some words of advice, you know, because it's all about relationships, even, you know, with the brokers, with, with investors, with all the different people in this business. I mean, it's going to be common sense, but I still want to I want them to hear you guys say it. What did you do to build relationships to get you to where you are now?
Well, I'll tell you it's not emails and it's not a phone call. You take time, you sit down with somebody in person, you get to know them, You talk about your work ethic, their work ethic, and you get to know each other on a personal level, and you just spend time. You know, that guy, Ed, that I bought 8 apartment complexes from, he waited till he was 80 years old to retire, and I had just maintained a relationship. I went and rode my bicycle with this guy, and we had a relationship. By the way, he was 80 and I was much younger, and he kicked my butt, just so you know. But we would ride bicycles. And but when it came time, I was the guy he called. This is, hey, Glenn, do you want to buy my apartment complexes from me? So somehow, to all the newbies that are listening, you know, find a way to figure out who's going to help you get from A to B. Is it a broker? Then spend a relationship with a broker. But if you can network with other owners, like I go to these events now and I'm developing relationships with people that now want to buy my apartment complexes, and I'm spending time. But I'll tell you, when I get ready to sell an apartment complex, and I'll just, you know, throw on out, Eagle Point right now has, the broker gave me a list of, you know, the top 10 offers, and we narrowed it down to the top 3 offers. And here are the things that I asked the buyers. How many units have you closed in the last 12 months? Has your equity already committed to this deal? And then I asked the broker, have you transacted with this particular potential buyer, yes or no? So if that buyer said, no, I haven't transacted in the last 12 months, they're off the list, right? And if they say, if the broker says, no, I've never transacted with this one, I then say, okay, broker, what do you know about him?
Right.
And if he sells me and says, look, I've spent the last, you know, 2 or 3 months with this guy or gal individually, and we've spent lunches together and we know each other, Glenn, I recommend they're gonna close. Then I will say, okay, broker, if you know them and you know them well and you spend time with them and you think they're gonna close, then they're up to bat.
Okay.
Right.
Okay. Let me know if this noise from the guys, my yard guys just showed up. Perfect timing. But Maureen, what would you add to the relationship building?
Yeah, that's it. You always want to, I think in the beginning, some of the ways that I've gotten deals from brokers is just, you know, I'm pretty friendly and easy to work with, but I see some people kind of struggling sometimes to get their first deal, or they don't understand why the brokers aren't giving them better stuff. But, you know, brokers don't like to be challenged necessarily. So if you find a way, you know, brokers are there to tell a story. They're there to sell the property. So what I've found sometimes is I kind of call it broker talk. You have to kind of take it with a grain of salt. But if you're defensive with them and you say, hey, that doesn't make sense, or why are you, you know, BSing me on this? Like, you got to be easy to work with. They're not going to want to work with you if you're constantly like butting heads with them. So, you know, you definitely want to be on their side, sort of. So it's more of a we thing than you versus them. And then also just try to find commonality. I've done really well with a certain broker firm, and the first time they called, I was calling Georgia, and they said, oh, you know what, we call you from the north, right? And they're like, I'm like, no. And they're like, a Yankee. And I'm like, huh. I'm like, you know, what do I call you guys from the south? And they're like, oh, you know, so we just kind of had that going back and forth, you know, but you got to have fun and, you know, just be able to play with them. And, you know, they were a family oriented business. So when I went down there, my daughter and my son went with me. So you try to just kind of find commonality and, you know, so I clicked well with the family oriented brokers because I have, you know, my family involved too. So that was an easy connection.
Nice.
I'm a female, I'm a little different. So whatever makes you a little unique maybe, or what you can bring, or knowledge, but easy to work with is number one. Doing what you say you're going to do. If you say you're going to get back to them tomorrow and you don't call them back for a week, you know what, you're probably not going to be top on their list. And really showing up is just showing up. Even if you don't get anything from that deal, it's going to build momentum for another deal. Love it.
Love it. Kenny, anything to add, buddy?
Yeah, I guess whenever we're going to a new city, or even if I was starting out now, I would find the management company. You know, now we've got our own in-house, but when I was started out, I'd find the third-party management company first, because they would keep the brokers honest. Because you're looking at those OMs, and the brokers have these, you know, it's as if God himself are running the property, you know, on their pro forma. So you need to have that information from the management companies that are on the ground, that have units around it or in that same city. They can kind of help shape you to make sure you're not overpaying and making a big rookie mistake.
the younger brokers with the group, and not just young age-wise, but newer into the group. So whether it be a Marcus and Millichap, Cushman Wakefield. So those kind of guys, they're hungrier. They don't have their buyers list really built up yet. So that's a good person to connect to as well, because they're a little bit more eager to work with somebody that's also new, and they don't have their list that they just go to all the time already. So yeah.
Awesome. Okay, so last question, and that is, and I ask this a lot, but it's great to have the three of you here. If you were going to tell your 20-year-old self something based on what you know now, what might you do differently? Is there anything that you do differently? Glenn, let's start with you, buddy.
So I remember when I was younger, one of the things that was important to me were things, possessions, property, boats, houses, cars, stuff of that nature. Looking back on it, all that did is added stress to my life. If I were to tell myself 20 years ago, my advice would be this: stay out of debt. You don't have to have everything flashy when you're young, because that doesn't determine or define who you are. Those things will come in time, if they're of value to you, but the young me thought that defined who I was, and it really didn't. And looking back on it, I really regret that about my life. And I would have stayed out of debt. So anyway.
Oh, okay. No, thank you. And I feel exactly the same way. And I'm the poster child for excess with the Lamborghini and the Maserati and all the stupid shit that I did as well. Thank you. That's not what I expected to hear from you, brother. I expected to hear, yeah, I would have bought more, I would have gone bigger, I would have gone faster, but thank you for that, because that was very honest. Maureen, how about you?
For me, I'd say just, now kind of look later in life, I'm learning that the people you spend time with are just what an impact they have. So, positive people that are out to do the right thing, just don't waste your time with, people that make you feel like you need to take a nap after you deal with them, because they kind of suck the energy out of the room, or just negative people that you're constantly trying to defend yourself with, or explaining yourself, no, this is why we need to do this, and you're right. So and then anybody that you're going to get in a business with, I'm just very careful. If I don't trust somebody 100%, I don't do business with them, because there's so much energy wasted kind of watching your back or wondering what they're going to do, that it's just a waste. So life is more exciting and fulfilling and happier just being really aware of the people around you. Somebody told me, don't have a person in your life that's not your fan. So if they're not a fan of yours, get them out of your life, whether it be a parent, a sibling, whatever, a close friend. Just don't just get them out of your life. And that's been huge for me.
No, that's awesome. And that's so dead on. And guys, as you're building relationships in this business as well, pay attention to how much you like the person you're doing business with, because you could be doing business with them for decades. That goes for investors. That goes for, frankly, even brokers and property managers, of course. I mean, you've got to enjoy the relationship. Kenny, anything to add? What would you tell your 20-year-old self?
Well, so I was 28 years old when I got going in multifamily. So 8 years earlier, I would have skipped going through oil and gas and just jumped into real estate. I mean, I learned a lot by doing that. Ended up being a CFO at a young age, but I did learn a lot. But I wish I would have got into the real estate investing earlier on. Is what I would have done. So
nice. Yeah, same here. Well, guys, I'm so grateful for you guys taking your extremely valuable time to be on the show. Glenn, I will see you in Tampa here in a couple of weeks.
Yes, sir. I'm very excited about that.
Maureen and Kenny, I saw you recently in my last event. You guys, I do a panel, by the way, in the Saturday nights, and I have hitters like these guys on stage. This is usually $1 billion at least there at the event or more. And we have a lot of fun. But anyway, guys, Happy New Year. It's great to see all your faces. I'm going to see you all again in San Diego in March, and Kenny, you sooner. And guys, thanks again, and we'll talk to you all very soon.
Looking forward to it. Thanks for having us, Rod.
Yeah, thank you.
Absolutely.
Thank you for listening to the Lifetime Cash Flow Through Real Estate Investing podcast. If you've enjoyed the show, please take a minute to visit iTunes and leave your comments. For more resources or to connect with us further, please visit our website at rodkhleif.com. Tune in next week for our next show.
Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws.